Hi, my name is Marie Sapuka, and I'm the Managing Director with Strategic Retirement Partners in Houston, Texas. So just as small business owners are receiving their PPP loans and trying to pick themselves up and back on their feet, it seems like they've been dealt yet another blow, this one coming from the IRS. So the IRS has made a pretty controversial call on the deductibility of expenses under the Paycheck Protection Program, and it's creating quite a stir from both parties and in Congress. Notice 2020-32 was released on April 30th, and it states that the IRS will not allow a tax deduction for an expense that is otherwise deductible under Code Sections 162 and 163 if the payment of that expense results in the forgiveness of a covered loan under the PPP. Now, the IRS is also relying on Code Section 265 to justify their denying this type of deduction for forgivable loans, claiming that the purpose of this particular code section is to prevent a double tax benefit or from a taxpayer double dipping. So in a May 5th letter that went to the Treasury Secretary, senators from Iowa, Oregon, and Massachusetts argued that it's not Congress's intent to have loan forgiveness taxed. So here's what I would say. I believe that the CARES Act was really put into effect to allow small businesses to have some type of lifeline to help them pay for rent, to help them cover employees that are on payroll, as well as at some point in time to hopefully help them get back to regular business operations when it's safe to do so. I would also point that Section 1106I of the CARES Act does say that a PPP loan recipient would not have to recognize taxable income if the loan is forgiven. So in effect, it would be making this loan a type of tax-free grant. So let's take myself, for example, and say that I received a $10,000 PPP loan, and I'm going to use that loan over an 8-week period to pay for my employee salary expense as well as rent. Now, when I go to file my business tax return and hoping that my loan is forgiven, I'm going to, at normal circumstances, look at my business income and deduct normal business expenses like salary expense as well as rent. But right now, the IRS is saying that's a no-no. I can't do that. So in effect, what I have to do is really pay business tax on my gross business income, which in effect means that I'm paying tax on that forgivable loan. I do believe that there is going to be a legislative fix for this. And I think it was on May 6th, the chairman of the state Senate Finance Committee, as well as senators from Texas, Florida, and Delaware, did introduce what's called the Small Business Expense Protection Act. And it clarifies that expenses paid with forgiven PPP loans should remain tax deductible. The House is also planning some type of similar legislation. To date, the Small Business Administration has said that about $175 billion has been lent to small businesses during this phase 2, and that the average loan for small businesses was about $79,000. So, yes, I definitely understand the intent of the IRS to prevent double dipping, but give me a break. Or should I say, let's give small businesses a break. Let's let them deduct the regular business expenses they normally could. At the same time, let's let the PPP loans be forgiven and not taxable. Thanks so much for listening, and have a great day.